With hundreds of MEPs being elected, it's time to talk about how the European Central Bank keeps us all having worse lives than we could be. And while we're focusing on the European Central Bank, let's understand that this occurs with every single currency that is a fiat currency. Fiat money is a government issued currency that is not backed by a physical commodity. So instead of, back in the day, a dollar was worth a certain amount of physical gold, it is now just purely based on the trust in the government that issues it. So it has the value that we believe it has because we say as a government that it does. And that's it. That's all the money has. Since the end of the earlier Bretton Woods system in 1971, most major economies operate with fiat money. See, the problem with commodity money is that whatever you have it based upon, it is a finite thing, correct? So if we want a system based on gold and silver, we need to theoretically have an equivalent amount of gold and silver for every item in our economy that could possibly exist. And this creates a big, big problem because there is just not that much gold and silver in the world. There has not been that much gold and silver ever been produced to be able to back every single thing in every single country. And thus you hit very hard barriers very quickly when you have to have a physical thing representing the money system you're using. And even if you're not using physical gold coins and you're using paper money that is backed by gold, you reach the exact same problem. Now, having a fiat currency means that you're able to spend as a government as much as you need to, as effectively the way spending happens is the government directs the central bank to give it a certain amount of money, and the central bank does that thing. And that's it. That's the entire process. There is no needing to get money from banks. There is no need to have more gold mined or any of that sort of thing. The money exists because the government has legislated that it exists. Now, this new monetary system made it a lot easier to spend on social programs. Obviously, economists from the right did not like this, especially one of our main characters of the radical reaction to this monetary policy, Friedrich Hayek. He created what is called the Austrian School of Economics, which gave birth to the Chicago School of Economics, which brought us the current system we all live under, neoliberalism. This is the dominant economic ideological position that is held and considered real by most sitting politicians at this current point in time. And keep in mind, this is just an ideological position. It actually has no material value in the real world. The prophet of this economic philosophy was Milton Friedman, and he is a character you should look up on your own time. Neoliberalism postulates an importance on running no deficits, paying off the debt, and that government spending should be limited at most, and that it's most important to let the spirit of the market do its thing. So, if neoliberalism is an ideological position on how the economy should run, how is it actually running? Well, there's another theory called modern monetary theory, MMT, that tries to answer that question. So, let's run through MMT's main tenets. A government that issues its own fiat currency can pay for goods, services, and financial assets without the need to first collect money in the form of taxes or debt issuance in advance for such purchases, cannot be forced to default on debt denominated in its own currency, is limited in its money creation and purchase only by inflation, which accelerates once the real resources, labor, capital, and natural resources of the economy are utilized at full employment. Recommends strengthening automatic stabilizers to control demand pull inflation rather than relying upon discretionary tax changes. And 5, issues bonds as a monetary policy device rather than as a funding device. The first 4 MMT tenets tend not to conflict with the mainstream economic understanding of how money creation and inflation works. However, MMT economists disagree with mainstream economics about the 5th tenet, the impact of government deficits on interest rates. So let's kind of go through these, and in this chart it has a comparison with more the mainstream Keynesianism theory, which is a lot more commonly understood. So on funding government spending, MMT emphasizes that government spending is created by crediting bank accounts. And this basically means that a central bank gives money to whatever bank of the people they need to pay, it needs to get paid. That's it. And then on the purpose of taxation, it is to primarily drive up the demand for the currency, and secondarily uses taxation, including the lowering of inflation, reduces income inequality, and discourages bad behavior. And the bad behavior thing is everything from taxes on cigarettes to, for example, very wealthy people having to pay wealth taxes, because if you have billionaires in the economy, then it creates a very distorting situation, as we know quite well. And then achieving full employment. The main strategy uses fiscal policy, running a budget deficit large enough to achieve full employment through a jobs guarantee. Then, now, I think the big hesitancy here is basically you're hearing so the government can just spend an unlimited amount of money and it doesn't matter. And that is not what I'm saying. It's very important to understand that the limits on what a government can do are material things. So it's like, do you have the people, so the labor, the talent to do it? Do you have the actual physical resources, or do you have to purchase them from abroad? Or do you have the capital to get it done? So the actual like means, goods, machinery, all the stuff you need to actually get a project off the ground and keep it running. And so those are your hard limits. It's not a theoretical idea of like how much you can spend in the money that you're printing is. It's the real physical thing that's like hard limit. And that is what controls your inflation and affects your interest rates too. Now, I can highly recommend you to look up the work of Stephanie Kelton. She's one of the forerunners in MMT, and especially her book, The Deficit Myth. There's often a lot of conversation around how Europe has not unlocked the full potential of the single market, but so much of that locked potential is due to our locked monetary policy. The European Central Bank is controlled by old dudes who love neoliberalism and hate government spending and definitely hate government deficits. If we spent like our capacity allowed us to, it would allow us to have the high-speed rail across the continent running from Paris to Warsaw. We could have all of the things that we need for the climate change transition. We could have the best labor rights. We could have the best healthcare. We could have the best of the best everywhere. And we would not have to constantly be scratching and fighting and competing over less and less because some bankers who believe in an ideological orthodoxy say that the economy spirit needs these things to happen. They need us to not spend and to make people suffer a bit, to make the economy a bit happier. But this is ridiculous. It's a ridiculous myth that they believe, and we can elect new people and choose new appointees that do not believe in these ridiculous arguments. We can have the economy that our monetary policy allows. The future is on the shelf. We have the technology, the skills, the people, the capital, the material goods to achieve all of these things. We just have to unlock our monetary policy so we can spend to make them happen. You want social housing? We need to have MMT monetary policy. You want to have better healthcare or better childcare or better everything? Then we need to unlock the ability to spend the money to make it happen. Nothing is going to occur by us just waiting around or spending no money. That is not how anything is made. It is built. So let's change how we think about the economy. Let's change how our politicians think about the economy. And let's make the economy work for all of Europe and change the European Central Bank to one that is funding progress and the future instead of strangling it for the past. Thank you.